on the downside at 24,807. Let's bring on board Sacchitanand Uttekar from Tradebulls as well to understand what we should be keeping an eye out on as well in terms of technical. Sacchitanand, good afternoon. Mangala mentioned the 24,807 level, right? For Nifty, we are keeping an eye out on that. What is something that we'll watch out for Bank Nifty? And is there a possibility that maybe we could go below the 24,807 today?
Good afternoon. I think well-defined levels already been communicated by Mangalam. But if you look at the overall support structure, I think there's multiple evidence that 24,760, 800, these particular levels will act as a very good demand zone. On the higher side, I completely agree that 24,930, 950 could be the resistance for the day. And the moment we see a breakout establishing on the daily scale, that particular level would be a trigger wherein we may see a very strong directional up move getting unfolded. But if you look at today's trading session, it clearly looks like a very sluggish day. But we are of the opinion that 24,800 may not be breached during the day itself. And we may see the expiry shaping up somewhere close to around 24,850, 900 kind of a zone. So the bias for the market remains positive until the Nifty continues to trend above that 24,730 mark. From a daily perspective, the trend has been evolving very well. We need a confident breakout above that 24,950 mark in a day or so, and we may see Nifty scaling towards 25,000, 25,200 during this particular series itself. When we look at Nifty Bank, there is underperformance, but if you look at the overall data, 54,000 looks like a decent support, at least for this particular week. On the higher side, we need a confident closing above that 54,440 mark, which may see a substantial change in the stance. But as of now, if you look at the Nifty Bank data, it looks more consolidative. I think financial stocks, Nifty Financial Index is something that we are watching out for. We are expecting that there could be a good rally in the coming weeks ahead, and that's why both the stocks that I am recommending today are from this particular sector itself. The first one being SBI Card. So if you look at the overall structure, the stock was in a severe low top, low bottom or a bearish sequence. But since last 2 weeks, we have seen that there has been a good, strong positive divergence on its daily RSI. The price has started appreciating that, and we have already seen this particular stock, heading towards its 200-day exponential moving average, which is placed around 840. We are expecting that this particular move may eventually unfold towards 880, where its gap area was formed on 28th July. That's why we are recommending building fresh long positions in SBI cards, keeping a stop loss at 790 on a closing basis. One can expect a trading target of around 840, where its 200-day exponential moving average is placed, followed by a pattern target of around 880. The other stock on our radar, which we have also recommended to our clients, is Bajaj Finserv. Now, if you look at the V-shaped recovery in the last few trading sessions, that is followed by a consolidation on the daily scale. If you look at the overall structure on the 60-minute charts, it looks like a classic bullish pennant formation, which is again a continuation pattern. If you look at the ADX on the daily scale, it has given a fresh breakout above the 25 mark. So it is a significant development from a trend momentum perspective. So we are expecting that this particular rally may extend towards 2080 immediately. But a position target is placed at around 2140, where its live high levels are placed. The stop loss can be placed at around 2020 itself on closing basis. And fresh long positions can be considered in Bajaj Finserv's futures as well.
Right. Okay, thank you so much for that, Sacchitanand. But, let's move on to